ETFs will be formed on any asset that becomes a trillion-dollar liquid asset in some jurisdictions throughout this era, so it's very inevitable. In my opinion, the danger is exaggerated as Bitcoin is already very well designed. The system does have a maximum block size for a reason. In the end, I believe that market forces will determine everything. In my opinion, the most decentralized and unchangeable database that humans have ever created is Bitcoin. Broken Money author and renowned Bitcoin macroanalyst Alden Lyn stresses the importance of Bitcoin ETFs in increasing institutional and ordinary investors' access to the cryptocurrency. With her extensive background at Ego Death Capital, Alden analyzes the ever-changing financial markets and the impact of Bitcoin on them. According to Alden, this stage of Bitcoin's evolution is pretty much inevitable. Various nations, including the United States, are sure to attract exchange-traded funds ETFs when an asset reaches a trillion-dollar liquidity. New developments in the cryptocurrency industry may soon cause Bitcoin's price to skyrocket again. Reports indicate that CME Group, the biggest futures exchange in the world, is preparing to incorporate Bitcoin trading into its platform, capitalizing on recent macroeconomic patterns in order to gain further insights. ETFs will be formed on any asset that becomes a trillion-dollar liquid asset in some jurisdictions throughout this era, so it's very inevitable. Additionally, the United States of America has a system of checks and balances known as separation of powers. Thus, the SEC was unsuccessful in court, despite its lack of desire for this. Now that more individuals have access to it, there are pools of cash, retirement accounts, and managed assets for those who desire it. Not many of them have ever had the chance to try. Because of this, they are unable to do it anymore. Therefore, disparities have developed. An issue has arisen due to the fact that they could only access it in a grayscale format. And now there's this huge escape hatch where a lot of money could finally leave that huge snare and go somewhere else, maybe somewhere cheaper or with better management. Consequently, I believe that's a process that can't be avoided. The worries about centralization, in my opinion, are exaggerated. That doesn't mean they shouldn't be discussed nonetheless. In my opinion, a significant portion of Bitcoin was already in a grayscale state. The current cycle includes BlackRock, Fidelity, and a handful of others. In such settings, the entire pie is expanding at a moderate rate. There are a lot of folks who would rather be there. But I think it's critical to stress that people should be able to self-custody with relative ease to ensure that individuals are aware of the dangers. The fact that people have more freedom of choice is, in my opinion, the main factor. Many individuals wish they could include Bitcoin in their 401k plans but were unable to. Their alternatives have expanded, or they may already have assets within RIA, but that advisor is hesitant or unable to invest in Bitcoin. They can now. In my opinion, that's something that will happen in the end. I don't care if it's good or bad, it's just going to happen. Therefore, I don't see anyone claiming that Bitcoin strayed from its original purpose just because exchange-traded funds ETFs are available for it. Bitcoin didn't make it into the exchange-traded funds. Using the monetary system, Bitcoin ETFs were created. And with that, the monetary system essentially integrated Bitcoin into its APIs through this means. ETFs provide a front door into several asset groups they have chosen to integrate Bitcoin at this time. Plus, you stay away from large centralized honeypots, whether they're exchange-traded funds, ETFs, or anything else. There is always a danger when a large number of Bitcoin are held by a single custodian. Coinbase is where a lot of them are at the moment. That isn't optimal in my opinion. I believe it is prudent for individuals to exercise caution on that. Diversifying your holdings between custodians is a good idea if you plan to hold ETFs. However, I also believe that self-custody is beneficial. So, we'll have to wait and see how that plays out. However, in my opinion, it was always going to be a natural progression for Bitcoin, whether it was ever going to reach its current size. Even though just a small fraction of the population uses Bitcoin, its $1 billion market worth is having an effect on them. When WikiLeaks started accepting Bitcoin as a form of payment, it was already making waves. As a result, it started affecting people immediately in the periphery. On the other hand, at the macro level, it is possible to influence the value of a currency, a fee of currency, by providing the inhabitants of that country with additional choices. That becomes significant when value flows about at the size and speed it can do presently. It is for this reason that governments are taking notice, institutions are taking notice of it, because for one thing, it has proven to be enduring. So it's more than just a passing trend or a piece of technology that looks to work for a while before giving out. Adaptability has been demonstrated. Two, it has progressed to a point where this is relevant. For those who aren't tech-savvy, there are plenty of individuals who can benefit from it. It's great for those who are merely seeking practical applications. Before Bitcoin can attract serious investment, it must first overcome many important obstacles. According to crypto traders, Bitcoin is following a similar pattern to what happened after the 2016 Bitcoin halving event. One indication suggests it might be approaching its local bottom, while another suggests it could hit $350,000 during the height of current cycle. Jack Dorsey's recent audacious claim that Bitcoin can reach $1 million by 2030 has stoked speculation about the cryptocurrency's potential price growth over the following decade. According to British financial guru Raoul Pal, Bitcoin's value will skyrocket in the next summer and autumn, suggesting a parabolic rally. Alden Lyn is bullish on Bitcoin's long-term price prospects but is unsure about the next 6 months. She stresses the importance of problems, such as fee spikes, in driving innovations and scaling solutions. She has faith in the Bitcoin network's ability to overcome challenges because she views its evolution through reaction mechanisms as a natural process. Here we are, refocusing on a video. Okay, now let's talk about price. I don't have a clue what the market will do in the next 6 months, but I'm hopeful about it over the long haul. Also, I believe I'm on the same side as a member of the Bitcoin community, Bitcoin Twitter, or Bitcoin users in the West. This is comparable to an iceberg chunk. As far as we can tell, this is the viewable portion, in that we are taking part. At the global level, its impact exceeds our current comprehension. In addition, response functions are my primary area of interest. My training as a system engineer is relevant here. When I examine macro systems, for instance, I've noticed that people tend to get nervous if there's a shift in the market. What they don't realize is that there will be a mechanism of resistance once it reaches a certain point. It's going to fight back the opposite way. They become very paranoid when it turns around and heads in the opposite direction. For the time being, they consider it to be the norm. Then there's the response function, which usually causes it to be pushed back. Regarding Bitcoin, detractors would point out that it had cheap fees, a security flaw, and was otherwise flawed when it was in its early stages. Furthermore, it possesses a lot of people are trying to flood it with JPEGs and bean coins, which leads to high costs. Some people are saying that this is broken and that the sky is falling because of the high fees. One reason Bitcoin is useful, in my opinion, is because it is difficult to alter, akin to the United States Constitution. Despite its flaws, the US Constitution is tremendously useful because it necessitates such large supermajorities to alter its fundamental provisions. Additionally, Bitcoin functions similarly, but in a digital format. It's this set of rules. As with every artificially constructed system, there are costs and benefits. Of course, there are costs involved, and there are also user experience issues and restrictions of various kinds. The fact that change is difficult is crucial, not that change is impossible, as it would be terrible as well. Our own emotional ups and downs are sheltered from by it as well. We start off thinking, this will never work, and then something like fees are low, and then something like fees are super high, and so on. The only reason all these scaling features will be introduced to Bitcoin is due to fee dislocations. There isn't much of a need to construct scaling technologies on top of a blockchain if sending anything only costs 50 cents. If you need something faster, you can always utilize Lightning. But if transfers only cost 50 cents, the economic need for scaling is low, and that much is obvious. However, when these spike, it's usually because everyone is suddenly pulling into self-custody and adjusting the market, or because someone is temporarily flooding the fad with messages like, okay, well, we don't know when these fee spikes are going to happen in the future. We would like to have additional options so that we can anticipate these increases in fees. Either we need to construct this answer, or we have discovered that this technological strategy is ineffective. Let's switch to this tech strategy that works better with